Hey everyone, welcome back to another dividend investing video. When it comes to dividend ETFs, I don't believe there's a better choice available for dividend growth minded investors than the Schwab Dividend Equity ETF, SCHD. Lately, a lot of investors have been dumping on this ETF as it has been underperforming some other similar ETFs in the short term, not to mention the massive run-up of the AI and tech stocks such as Microsoft, Nvidia, and Broadcom. But SCHD has done it again. They just announced their largest dividend payment ever, reaffirming my own choice to heavily invest in this dividend ETF king. Today, I'll go over the latest with this dividend ETF and even my own position, as I've been buying a ton on this one. So let's dive in. I'm Nick, and this is the Dividend Growth Income Channel. Thank you for joining me today. I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could, please do me a favor, smash the like button and subscribe to keep up with future videos. This helps us out more than you can imagine with the algorithm, so we can bring you more quality dividend investing content. So earlier in the spring, 2024, SCHD had its annual reconstitution, and it had a lot of investors disappointed as SCHD dropped high-performing stocks like Broadcom, ticker AVGO, and automatic data processing, ticker ADC, and added companies like the Hershey's Company, ticker HSY, and Bristol-Myers Squibb, ticker BMY, which are both down massive in the last year. And years ago, SCHD dropped Microsoft, ticker MSFT, from its index, which has went on to double multiple times since then. But remember, the focus of this ETF is dividend income focused, and specifically, they've done an excellent job of giving their shareholders a growing dividend. Over the last 5 years, investors have benefited from an average annual dividend growth rate of 13% annually just from holding SCHD shares, not needing to handle all this rebalancing and stock selection that drives such dividend growth. Now, continuing this, on June 26th, they announced their largest single dividend payment in SCHD history. On July 1st, it's paying a dividend of just over 82 cents per share. That's 82.41 cents for each share you own. Now compare that to the June 2023 payment of 66.47 cents, an astonishing 19% over that payment of 1 year ago. They typically pay in the months of March, June, September, and December, but at the end of the month, so this time, the pay date technically got bumped into July, although I think for my own tracking purposes, I'm just going to keep counting it as part of June, because that's historically where it has always been paying. Now, if you're looking for companies like Microsoft, Broadcom, Nvidia, look, you invest in places like an S&P 500 index fund like VOO or SPLG. And this is my single largest investment. If you look at all of my investments, I invest in that S&P 500 index because that is market returns, right? And that's what I'm really trying to do. Now, you could also go with a NASDAQ ETF like QQQ or a growth ETF like SCHD if you have time. And those are likely to appreciate in capital at a faster rate, right? You invest in SCHD because you are specifically interested in that dividend income, that growing dividend income specifically, and you're not expecting to necessarily beat the market with something like this. It is a more traditionally defensive play. And by the way, I'm glad I was buying my own shares of Broadcom and automatic data processing because I want to keep myself invested in those companies. And this is one reason I'm fine owning the stocks that are in SCHD individually. I get asked this question a lot, actually, because if you look at the top stocks in SCHD, I do own quite a few. So there's a lot of overlap in my portfolio between my SCHD and my VYM and my holdings, right? So here are the top 10 stocks in SCHD today as it stands. This is as of June 26th, okay? By weight. Amgen Inc., ticker AMGN, at 4.12%, AbbVie at 4.1%, Cisco Systems, ticker CSCO, at 4.09%, Home Depot, ticker HD, at 4.06%, Chevron, ticker CVX, at 4.06%, BlackRock Inc., ticker BLK, at 4%, Lockheed Martin, ticker LMT, at 3.99%. I own most of these. Coca-Cola is at 3.96%, ticker KO. Verizon Communications, ticker VZ, at 3.94%. Then Texas Instruments, ticker TXN, at 3.93%. Altogether, this top 10 makes up 40.25% of the weight in SCHD, highly concentrated on this top 10. Now, I own 7 of these individually, 6 of them in my dividend growth income portfolio. My Texas Instruments position is in my Roth IRA. I'm going to continue holding these because when SCHD does its rebalance. Some of these stocks could leave, some could, other ones will come in, and I'll still have the positions in the ones that I want to hold myself. But with SCHD, look, I'm investing in their tried, true, proven dividend growth strategy, right? It's totally hands-off, and it costs next to nothing. That 0.06% expense ratio amounts to $6 out of every $10,000 you've wrapped up in SCHD every year. That's just pennies, right? Now, how do they select the stocks that are in SCHD, you might be wondering? What they do is they follow the U.S. Dividend 100 Index by S&P Global, ticker SPGI. I'm not going to go into detail on how those are selected exactly. I'll leave the methodology up here on the screen. You can pause and check it out if you are so inclined. But in their own words, the Dow Jones U.S. Dividend 100 Index is designed to measure the performance of high dividend yielding stocks in the U.S. with a record of consistently paying dividends selected for fundamental strength relative to their peers based on financial ratios. Now here's how those holdings all break down sector-wise. Financials make up the largest amount of the fund at 17.11% of the weight, followed by healthcare at 15.65%, consumer staples at 14.43%, industrials at 13.42%, energy at 13.04%, consumer discretionary at 11%, technology at 8%, communication at 4.65%, materials at 1.8%, and almost nothing in utilities and zero real estate exposure, and that keeps that dividend payment qualified. But these are the kinds of companies you would expect in a dividend-heavy fund, right? You got the financials, the staples, the healthcare, industrials. Now, as for my own position, I am holding this ETF across two accounts, my Roth IRA and my dividend growth income portfolio I share here on the channel. So in my Roth, I've been buying it each week on Monday, or the opening day of the market, as part of my weekly investing challenge that I do to ensure that I max out my Roth by buying this, and I also buy SPLG and S&P 500 index. And I've done this each week in 2023 and 2024. So this has me sitting on 78 shares of SCHD in that account, currently valued at $6,027.06. My average cost is $74.71. This position is going to pay me out $64.28, and I'm getting close to where this is almost going to be buying an entire share of itself, probably in another quarter or two, or it'll be enough to do that. In my dividend growth income taxable portfolio I have with Fidelity, I share here with you guys on the channel, I'm at 25.646 shares of SCHD, and that's valued at $1,981.66 with an average cost of $72.22. So I'm a little more selective when I buy SCHD in this account, hence the lower cost. While in the Roth, I'm straight just dollar cost averaging. Every week I buy the share. But in the smaller position in the taxable, is going to be paying me $21.13 in dividend income. So altogether, I hold over 103 shares of SCHD valued at over $8,000. And this is paying me about $85 total here on July 1st. Now in the taxable, it's just going to simply DRIP and reinvest back into SCHD. And in the Roth, I'll use the dividends to buy REITs like Realty Income, VICI Properties. I also use them to buy stocks like SCHG, growth-focused ETF. I hold in the Roth for the capital appreciation to get those NVIDIA and Broadcom gains. I like my dividends and I like my growth, and I invest in ETFs like SCHD, and it makes it easy for just about anyone to do without getting caught up in the additional risk of individual stocks or having to pick stocks. It just does it for you. Again, you are not going to beat the market with this one most likely, although if you look at the 10-year chart, you will find there are times where they run pretty darn close, and there's even a few moments where SCHD will take the lead, usually in bear markets when defensive stocks are on the rise. But before the AI run-up, as we saw over the last year, performance was actually quite comparable between SCHD and an S&P 500 index. And even today, the SCHD 10-year total return of 175%, it's respectable. Solid performance for a dividend ETF. That's great for people who want some income and some capital appreciation at the same time. Now, today's shares of SCHD are trading around $77.27. And year to date, they're up only at 1.35%. So you can understand why some investors are looking at this and ditching it for other opportunities. They see an opportunity cost there. Look, but I believe times like this make it a great time to double down on these types of investments. And I'm doing just that. I'm putting my money where my mouth is, I believe. Now, I'll continue buying this every week in my Roth. I'll also be adding to my taxable position when I think the time is right. I'm a little more selective there. And let me know down in the comments how much SCHD is paying you in this upcoming payment, or if you're a fan of another ETF such as DGROW, VYM, tell me about it. Hit me up down in those comments. Help me on that algorithm. And if you want to see the 3 stocks I'm buying up this summer, go ahead and click into this next video. Thanks for tuning in. Until next time, my friends, keep investing.